Hello guys, welcome to my YouTube channel. So today I have taken a position, sorry, not today, yesterday itself have carry forward a position in Nifty futures. So this is the completed order. I just have exited the position at 3 o'clock as you see. So this is the take profit order that I have cancelled it. So you can see the position has been executed yesterday itself. So there is no sell order freshly placed in the order book. So this is the position, guys. Unfortunately, there is nothing much I could do. So I'll show you. Yeah. So the thing is, when we know that the market is bearish and when we know that the market is going to target some sort of liquidity over the downside, so what we ideally do is, so we would like to see any sort of manipulation or liquidity that has been taken out, right? So generally, if you see all my setups, what they have been in common. So the thing is, for example, this is a point of interest and market has reached over here and it has retraced. Now do you short here? How many times do you think this will be a successful thing? So this gives a probability that is very less. So people will short here with there any sort of FVG or breaker block or any sort any sorts, keeping them as reason. But imagine market has tapped into this fair value gap and you want to short. Once you see this down move, everybody is going short over here, seeing this point of interest. So I am not interested in this area to short in any of this leg. So instead, what I would do is I would try to see any sort of manipulation. So do you think that this manipulation is enough for me to go short? No. And then what we would like to say is we would like to take out this high and we would like to see any sort of good bull bar so that we can short down. All the people who see some sort of support from here or order block or any of that sorts, they would like to see that the market is going up, so we might short, and this is a break of structure, and this is a support resistance. Traders might consider this as no bull breakout entry, so that they'll target till here. That is where you go short in a bearish trend when you are anticipating the market to go down. So on that same theory, what has happened yesterday? See, in the whole trading range, I think I have booked some loss, right? The day before yesterday, and now you see yesterday there was no sign of any manipulation that market has generated. You see, this is the bearish move, and everybody is short here. But what market has done? So it has taken out the liquidity that is resting over here, keeping these lows as protected lows, and then it has given this huge upside candle, right? So who is not buying here? They are all buying, seeing some sort of a double bottom, relatively liquidity has swept, and obviously support resistance traders would trade this as a huge bull bar so that market will continue going to the upside. And support, typical support resistance traders might also consider this as a resistance zone. Until unless this breaks, I will not go long. So what has happened? See, this is a manipulation bar. Of course, there is a ton of liquidity. So once market has taken out this liquidity, we could be very much sure that the market can go down in a better way. But what I have done is I have taken entry yesterday itself. See, when this bar was forming, I think I'll show you the future chart. Um, yes. So this is the futures chart, guys. So I have taken entry somewhere in 762, I guess. So wait, if there is any order book, I'll show you that, guys. Mm. Info sells 25. Yeah, I have sold at 23,762. Okay. So this is the carry forward order, right? So that's why it is showing normal here. So I have shorted at 23,762. Now you see 23,762 is here itself. I think, yeah, I have shorted somewhere in this bar, I guess. And I have kept my stop loss somewhere on this high or on this somewhere relatively on this highs itself. Why I have kept my stop loss here? Why I have shorted here? Because this is a manipulation candle. If you see in the 15 minutes, all the people what they'll see is like, okay, this is a BPR zone. This fair value inverse fair value gap has been. Yeah. Sorry, guys. So all the people who trade ICT, they see this as an inverse fair value gap. They'll try to go long here, targeting this liquidity. And a lot of people who have seen the 1 hour candle, they are also going long. So who is short here? Especially when market is in the bottoms, it gets so tricky to go longs because you don't know where could be the actual buy side momentum and where would be the trapping zone. So what has happened? I have shorted here exactly. on this 762 price. So I have placed my stop there and I held my position. As we all know that overnight carry forwarding a position is very risky. So that is why I have only taken one lot. Otherwise, I would have taken at least 3 to 4 lots. So I have carry forwarded it, and today market has opened bearishly. It has given some sort of pullback. Why this pullback has a significance means all the people who are trading, ICT concepts, they see this bull bar, they see this inverse fair value gap taking support, they see these bull bars again forming here, so they are all long here, placing their stop losses here or either here. So all the people got trapped. And you see this manipulation bar here, order block also did some job, but here fair value gap is the actual banger here that has pushed the price so harshly. And now I had to exit somewhere here only because of the reason that the market is not having enough strength to hold. I was drawing these levels, you see this volume gap. This is also trying to hold the market to some extent, but then it couldn't push the prices far below the downside. I was literally hoping for this target, but then I lost interest because of the momentum that it is moving. Could be possible, maybe tomorrow the market could gap up and do some sort of liquidity sweep on the higher levels and then fall down, or tomorrow it could either gap down, or tomorrow can again open in the sideways range. I'm not sure now. All the analysis people, pro traders in the YouTube community, they'll literally tell you like this is the support zone. If the support zone breaks, go short. If the this is the resistance zone, if the resistance zone breaks, go long. So that's why they'll be telling you. But trust me, guys, most of the time it doesn't work. It takes you years and years of research, back-tested data, your hard work and energy to find one single edge. And that, that comes with a lot of, you know, patience. It will literally test your personality. It will literally crush your identity as well sometimes. So only to find one edge that consistently works for you over a time. So uh, it's all about your personality, guys. But this is how I trade. I've just only booked my minor profit, but uh, that's okay for today. You guys might be wondering, like, sometimes I say I have shorted somewhere here because of this, BPR zone, and some other day I might be telling another reason. Someday I might be telling that I have shorted here itself. Like, why do you think one day I am applying the another reason? Is because market doesn't move on a single rule. If it works in a single rule, then trust me, everybody would be a millionaire or billionaire on this earth. So it doesn't like that. Markets are always meant to trap you. They are always meant to take your money from your pockets. So you should be more smart enough to know that you should be safeguarding your money with the probability that has a reasonable win rate. So enough of my blabbering, guys. So I hope uh, this video has helped you in a certain way. So thank you so much, guys. So let's meet in the next video. So stay tuned.